All right, all right. Hey, trust you are doing well. Just wanted to kind of shoot a quick video. We're wrapping up the week here, working on a bunch of different projects, sharing with you, what are some of the focuses and concerns that we're seeing in the marketplace. Just love my cross picture there, reminder, right? So really with that, what are we looking at? So there's a number of things that have taken place when you look at this past week or 2 weeks, really. One of the biggest things that stands out is the job numbers that came out where they reassessed and eliminated some 220,000 jobs when they realigned the numbers for July. And, that was big. That also was it shared an underlying softness in the job markets, which then the bond market reacted probably with a 30-point drop in treasury yields, and that's a reflection of investors thinking, okay, the economy looks less strong based on the job markets, more money's rotating into bonds. The other thing is we just saw is this past week, the inflation data came in a smidge lower than what they expected at 2.7%, which that in turn fueled a bit of psychology and market thoughts that the Fed would be more likely to cut rates next month. So again, what we're talking about is really the interest rates, the impact, what's going on in the economy. And ultimately, again, as we've been saying for quite some time, we are in a higher interest rate environment. Now, I see certain deals circulating around on the internet, and a lot of those deals are predicated on, achieving some 20 plus IRR, et cetera, based on also rates going down and their reversion cap rate selling and seeing that at a lower cap rate over the next, call it, maybe 3 years. And I would very well say that it's highly likely that interest rates are going to start to come down. But also at the same time, we also have to recognize that what we've talked about and what we believe is that we're in a decade of higher interest rates, higher pressures, and it's going to be a decade of operations. Anybody that says that they've been in commercial real estate the last 3, 4, 5 years, it hasn't experienced pressures from the skyrocketing interest rates or inflation rates or insurance rates is either lying or, maybe they're just being dishonest, or they owned one deal that had a 3.5%, fixed rate mortgage on it, right? The truth of the matter is everybody that I've talked to and folks that I know have experienced pressures from it in operations, and all the need the more to have operations really dialed in. And so what does it mean? Okay, yeah, the Fed is likely to cut rates this year. They're meeting next month in September. There's a likelihood that there will be a rate cut. That being said, there's still data that come out for both the jobs numbers and the inflation numbers. And the truth of the matter is Jerome Powell does not want to look like the whipping boy and the lackey from Trump. It's just the truth. He doesn't want to be perceived that way. So he may lean a little bit more towards, hey, let's continue to curb inflation and we'll keep rates where they are. So we just have to keep monitor of that. So, but that being said, it is likely that over the next 6 months, as we were to go through the end of this year and into Q1, there is a likelihood that we will see rate cuts by the Fed, assuming we see continued moderation in inflation and or the job markets still staying relatively soft. Now, again, if we see a little bit more in economic slowdown, then definitely we would see rate cuts, and we'd also see probably yields on treasuries start to go down. The other thing is just because the rate cut comes into play does not mandate that the treasuries are going to be that way. You look at the rate cuts that took place last year, and the treasury market's still at 420. It's 429 right now as we speak on the 10-year. And so the bond market is not directly driven by the Fed. It is driven by the market forces. And so that's what we want to be watching out for. And what that means is, yeah, as I shared before, there's distressed opportunity that's coming in the market. We see that, but it really is where you have to look at these opportunities and be able to take hold of them in a different light. Just going into things on a basis of thinking, okay, well, hey, we're going to get it. We're going to be able to do value add. Interest rates are coming down. And as a result of interest rates coming down, we're going to make great money. That's not necessarily going to be what you would have as an authoritative stance. And so I think you've got to be more judicious, more cautious in this moment, and really look for and dig for deep for the distressed opportunities that you're able to get at a distressed price so that you can capitalize on the market conditions. There still is a huge demand for rent. There is a continuous push for that, and there is a limited supply. So a lot of good factors ahead, but definitely you got to be on the lookout to see what exactly is going to be taking place with interest rates over the next 6 to 12 months. All right. Thank you so much. Have a blessed and victorious week, for this is the week God has ordained for you.